Alright, for the third video, we're going to take a look at the financial statements and how these individual items actually make their way onto the Schedule K-2s. Okay, so Schedule K-2, we fill out one per 1065, so this is kind of the summary or an expansion of Schedule K on the 1065, and then K-3 is for each individual partner. So each partner gets a K-3 with their K-1 package. So Schedule K-2, in Section C here, was pretty straightforward, right? Basically, we're just checking yes or no as to whether we needed to complete that part of K-2. So K-2 has these 12 different sections. Well, the 12th one is reserved for future use, so it's not used yet. So I guess it's just 11. But if you use the part, check yes, and then complete the part. If not, just check no, right? Now, Part 1, the pieces that we have to use under this fact pattern, the foreign tax translation and high tax income. So the foreign tax translation, this is happening because we have foreign tax credits that are passing on to the partners. And when you have foreign tax credits, they have to be translated to US dollars. And so you have to show the IRS how you came up with those translations, right? What is the currency exchange rate you use to be able to arrive at that US dollar amount? The high tax income, this schedule has to be completed and included with each partner's K-3, where you had income, so passive category income, so interest, dividends, right, that portfolio income that was subject to tax at source in that foreign country, or perhaps not subject to tax at all. So there's a worksheet in the Schedule K-2 and K-3 instructions will show how that was completed for each partner, but we do need to do that because we did have taxes, right? So we have passive category income and we have some taxes, so we've got to do that. The other ones don't apply, so we've just left those off, right? Don't have to check the box there. So Part 2, Section 1, the gross income, this is where we start to fill out the U.S. versus foreign source items. So when we look at Part 2, Section 1, let's start with the interest, right? So the interest, this is pretty straightforward, right? We're separating interest on line 6 into the various category moving left to right. So is it U.S. source? Is it foreign source? If so, what category income? Passive category income is what we're going to have here with interest, dividends, rents, things like that. Foreign branch category income, this generally happens when we have a qualified business unit or a QBU. So we actually have a branch in a foreign activity, or foreign country rather, and we're generating ordinary trade or business income. Nothing here because this is just an investment partnership. I would go look at my other videos, the playlists 1 and 2, where we cover those scenarios where we have U.S. ECI and then non-ECI foreign income. That's where you'll see the foreign branch category. So the financial statements, interest income from the U.S. was 905, interest income from Switzerland was 720, and so we've reported it accordingly here on line 6, right? Interest income from the U.S. On line B is $905. Interest income from Switzerland reported on line A. We scroll, it's not U.S. source, it's not foreign branch category income, it's passive category income, right? So we've got 720 there. All right, so that ticks off the first type of income. Then we move on to the dividends. Now this is a little more tricky because it doesn't reconcile as easy as what you would see on Schedule K. So what they want us to do here is report the ordinary amount of dividend on line 7, but don't include the qualified piece report on line 8. Now, if I go back to Schedule K, page 4, notice how that's different here. On line 6A, they want us to report all the ordinary dividends. So this includes qualified and non-qualified dividend income. On Schedule K-2, they don't want us to do it that way. What they want us to do is report the qualified amount here and then basically report the non-qualified amount here on line 7. So that's what we've done. So if we look at take the US stocks, for example. So we had $82,300 of ordinary dividend income from US stocks, $82,300. If we look at the U.S. source allocation here, get rid of that. So 16,460 plus 65,840. There's the total, right? So these are the total U.S. source amounts. So non-qualified, qualified, and if I add them together, I get my 82,300 in U.S. source dividends. Same issue here with the foreign source side. So we use the brokerage statements to figure out, okay, of the Swiss dividends that we receive, what portion is qualified, what's non-qualified, and we separated those out here, foreign source, passive category income. Okay, so if we do a check figure here, just to see how this is working. So if we add up all of these, right, so 570, 16,460, 83,80 plus 65,840, we get 103,250 in total ordinary dividends, and that is the amount that we're seeing here on page 4, 103,250 in total ordinary dividend income. All right, and then if you went and added up the qualified amounts and then the non-qualified amounts, those are reconciled back as well. Now onto the capital gains. Okay, so this is where it gets kind of fun, and there's a change so we're preparing this with the 2021 version and the 2021 instructions. There has been a change in reporting for these line items. Now you remember what I said on the slides. When we were going through the slides, I was talking about sourcing, right? So capital gains and losses on the sale of stocks, personal property, are sourced at the partner level, right? So the seller's tax home, when we have a partnership, you're looking at the partner to source the income, right? So under 865A. Now, when we look here at Schedule K-2, notice that what I've done is we have it in the source by partner column, but I've put each one on an actual country line. So Switzerland, that's the amount of capital gain on the sale of Swiss stocks. This is the amount of capital gain on the sale of these stocks on the U.S. exchanges. Now, these amounts should definitely be in column F for the source by partner, but you can understand there's some confusion here with, well, if it's sourced by partner, why do we have it assigned to a country on A or B? And that's because the instructions weren't that clear in 2021 as to how to report this. In other words, they wouldn't allow us to basically just write these amounts on a line and leave it blank, right? So the best way that I thought to kind of make sure that this was reported accurately and not confuse the user was make sure it's still reported in column F, and then it's okay to report it per country based on kind of the source of the company's publicly traded security, right? So where it was selling. But then I added a footnote to the K1s, which clarified this issue. So if I jump down to one of the K1s here for John Q. Taxpayer, I added these footnotes. Fake investment fund bought and sold securities on public exchanges in the U.S. and Switzerland. Under IRC Section 865, income from the sale of personal property is sourced at the partner level. The fund has reported your allocation of capital gains and losses from the sale of securities in column F of Schedule K-3, right, Part 2 for foreign tax credit purposes. There were no income taxes imposed on the sale of securities. Please consult your tax advisor. So why did I do that? I wanted to make sure and make it clear that, okay, they're sourced by partner, but they weren't subject to tax at source or either after the fact. And so that's why you should really still treat these as sourced by partner. I'm not sourcing them to one of these countries. It's just I had nowhere else to put them. What they've changed with the 2022 instructions is they said, okay, if you have a sale of personal property, it's sourced by partner, leave it on its own line item, and then put XX as the country code. So don't put other country, don't put various, put XX. So what would really happen if this was 2022, I would total these up, put it on line C, put XX on line C there as the country, and that would let people know that it's really being sourced by partner, it's not being assigned to any country, move on. But for 2021, I had to do it this way in order for it to make the most sense given the limited kind of instruction we had. Okay, so that covers those pieces. So now if we move to the bottom of Section 1, we're just starting to total up the amounts. So total amount of U.S. source income, there's the 83,205. So that's all the U.S. source interest and dividends. and then the foreign source interest and dividends there in the passive category income, and then the income source by partner, right? So 260,558, that's the capital gains. Now, if we jump down to the deductions, remember the total here on the deduction side is $32,500. That was all the expenses. And then we just allocated it across the income groups proportionally. So, most of the income was capital gains income, so I just allocated it mostly to capital gains based on the relative percentage, and then so on with the other pieces. There's a lot of other ways to allocate and apportion expenses. This seemed like the most reasonable way given the fact pattern of the fund. Okay, so part 3 here, foreign tax information. So this is being completed if there was any kind of foreign tax withholding, or the fund had to pay some foreign taxes, right, directly. You might be putting that down here as the direct foreign taxes. In our case, it was withholding, right? So we had Swiss withholding, WHTD, short for withholding taxes, and then you move left to right based on the category income the taxes were withheld upon. In our case, we don't have any guilty income, so 951 Cap A is guilty. We don't have a foreign branch, so the taxes most appropriately were being held on what we characterize as passive category income foreign source. So there's the 3142, and then the rest of the columns blank, right? So remember, $3,142, that is the U.S. dollar equivalent. That's after it was translated from Swiss francs to U.S. dollars. All right, and then the last part here, part 10, this is very, very helpful for both foreign and U.S. partners to get a sense of the source of income and whether it's being subjected to tax in the U.S. So we have our totals here on the left-hand side in column A, and then moving left to right, partner determination based on source, and then whether it's ECI, non-ECI, and then further broken down in a source within each. So here we have the total amounts of interest and dividends and capital gains. You can see here we're reporting $260,558 of capital gains as partner determination, right? So we're not assigning a source, and it's not ECI or non-ECI. Now for the interest, $1625, that's the foreign source interest. That's the Swiss bank interest. So it's foreign source, non-ECI, because we don't have any effectively connected income here. And then the 905 is U.S. source interest. That's being reported in column F as U.S. source other. Now, one question I often get is, why is it not in column E? Well, column E, per the instructions, they want us to put U.S. source FDAP income here that's subject to withholding tax by the U.S. The interest income here is exempt under that portfolio interest exemption. So it's still U.S. source, and it's non-effectively connected income, but because it's not being subjected to U.S. withholding tax, it's most appropriately put in column F. The U.S. source dividends, however, not so lucky, right? Those are truly U.S. source FDAP income, and it is being subjected to U.S. withholding taxes on the portion that's being allocated to the non-residents, all right? If we go down to part 2 here, the deductions, similar issue with what we looked at above on the allocations. Total amount of investment expenses allocated across the different income groups, okay? Just proportionally. All right, so now we've got the K-1. Okay, so look at this K-1 briefly, and then we'll jump into the Schedule K-3 and see how these parts can be traced back. So standard K-1 for a John Q taxpayer. You can see here on the face of it, he's the general partner, right? He was the general partner of the fund, domestic partner. There's his capital roll forward for Schedule L, $500K in, allocation net income, allocation of 19A distributions, and his ending capital account. Now remember, again, this is what is so great about the K2 and K3, is in looking at this on its face, we have no idea the source of this interest, right? Is it U.S.? Is it foreign? Is it a mix of both? Which is the case that we have here. Same thing with dividends, right? U.S. or foreign, what's what? And then the capital gains or losses, again, more detail provided in those K2s. So the K3, and so prior to the K2 and K3, what we would have had to done is basically add footnotes down here, which says, okay, total dividend income is X, this portion is foreign, this portion is U.S. We don't have to do that anymore because we have the K-3. All right, so that's it for this video. I'm going to end this one, and then we'll jump into the fourth video where we look at the K-3.